morning, Mark Soderberg with ADM Investor Services with your morning ag market update. A lower trade across a vast majority of the ag space here this morning as prices give back a good portion of yesterday's gains, or in the case of corn, all of yesterday's gains. Right now, beans are 13 to 15 lower at or near session lows. In the products, meal is down almost $4, while bean oil is off about 40 to 45 points. Corn down 4 cents. Wheat, the shining star here this morning, up 3 to 4 in Chicago. A little change in both Kansas City and Minneapolis. Yesterday's late surge in soybean prices took them to their highest levels in 15 months, that on the weekly bar chart. This despite U.S. prices being above FOB offers being offered in Brazil. This dynamic has prompted China to turn their imports back to Brazil for almost 10 more cargoes of soybeans for delivery next month, cutting into potential U.S. demand. Speculative traders were once again healthy buyers of soybeans yesterday, adding another 14,000 contracts since early last week when news broke of a potential U.S.-China trade deal. Money managers, we have them buying nearly 75,000 contracts of soybeans, which would extend their long position to about 95,000 contracts. And if that is ever verified from the CFTC, that would be their largest long position in nearly 2.5 years. Today is day 35 of the federal government shutdown, matching the longest in U.S. history, which was back in President Trump's first term back in 2018-19. Despite the shutdown, the USDA will provide aid production and WASDE updates on Friday, November 14th. Yesterday afternoon, StoneX, they provided their production updates leading up to this USDA report. Their corn production forecast at 16,748,000,000 bushels with an average yield of 186. That was slightly above their October forecast, however, down 66 million bushels from the USDA forecast in September. StoneX's soybean forecast at 4.303 billion bushels. That's almost identical to the USDA's last estimate in September. Their yield at 53.6, however, is above the USDA's 53.3, suggesting slightly lower harvested acres. U.S. harvest is believed to be winding down. A Bloomberg survey suggests corn harvest has reached 85%, while soybeans have reached 91%, both slightly above their 5-year average, however, just below the pace from a year ago. Winter wheat planting is also winding down. Expectations there of just being over 90%. Conditions are believed to have improved, up 2% on the winter wheat to 52%, good to excellent, well above the 41% from this point a year ago. Still no confirmation from the Chinese side on the volume of soybean purchases. The Trump administration continues to tout they will buy from the U.S. as part of this trade agreement. So with the sharply lower basis offers now in Brazil, it appears that even the near-term demand has shifted back to China, from China to our South American competitors. Remember, China's only going to buy what China needs, and they're going to buy it from the lowest cost provider. I would not be surprised if we scored a major market high in yesterday's trade here in the soybeans. It's now the job of the market to find a price level that shifts demand back to U.S. First support for GM beans is at $11, and I think without a weather problem in South America, I wouldn't be shocked if we go back down and try to fill these gaps from early last week. Inside trade for meal overnight, December oil that did reject trade over that 50-cent level. Inside trade for D's corn, next major support's at 420. And in wheat, still benefiting from short covering and a little bit of Chinese demand of U.S. wheat off the Pacific Northwest late last week. Thanks for listening, everyone, and I hope you have a wonderful day.